This is Chad Stayskull, President of Eagle Wealth Management, with our Educational Economic Update for January 2017. To keep our regulators happy, please stay tuned at the end of this video for our required disclosure statement. So to get into it, the final trading days of 2016, the market rally we've seen since the presidential election finally calmed. Major U.S. equity indexes posted losses for the week of December 26th. But despite this weekly dip, the S&P 500, Dow, and NASDAQ, which are three of the major U.S. equity indexes, each posted 2% gains for December. They also posted gains for the entire year, with the S&P up 9.5%, the Dow up 13.4%, and the NASDAQ 7.5%. Arguably, the biggest economic event we experienced last month was the Federal Reserve's much anticipated interest rate increase. On December 14th, the Fed raised benchmark rates by 1/4 point, which was only the second time they've increased rates since 2006. Fed Chairwoman Janet Yellen explained that her group's decision reflected the economy's progress and their expectations for continued economic development. The Fed also indicated they might introduce 3 additional interest rate increases in 2017. This is up from the previous prediction of only 2. Unlike the market volatility after the Fed's last interest rate increase in December of 2015, investors had a much more subdued reaction this year. Ultimately, rising interest rates are a sign the economy is growing. Last month, we saw several indications of this growth, including the final report of the third quarter gross domestic product. In the Commerce Department's analysis, they adjusted the GDP up to 3.5% annual rate, showing the fastest economic growth in over 2 years. GDP wasn't the only economic measure that beat expectations in December. Measures of consumer sentiment and consumer confidence both reached levels not seen in many years. Consumer sentiment, which measures consumers' views on current and future state of the economy, reached the highest reading since January of 2004. Measures of consumer confidence also hit a 13-year high, indicating that people feel more positively about business conditions, employment, and family income. In addition to these positive signs, we saw the dollar hit a 14-year high on December 20th. Crude oil also continued to recover as investors anticipate that OPEC and other producers will begin to reduce output in 2017. But of course, positive economic indicators don't mean that everything is perfect in the economy. Data released in December showed decreases in durable good orders, industrial production, and housing starts. Now, we don't like to see these declines, but the biggest economic question right now may come from not from existing data, but instead from changes to our political leadership. Stocks have rallied on hopes that President-elect Trump will reduce regulation and taxes while increasing infrastructure investment. But no one really knows this for sure, and what could be on the horizon, or more importantly, how these policies will affect trade. So, as we begin 2017, we plan to closely watch economic data and the political environment. We'll also now turn our attention to upcoming fourth quarter and end-of-year results to learn more about how the economy performed in the final weeks of the year. Now please stay tuned to next month's video, and we're going to have the annual data to discuss. But that's it for right now on our Educational Economic Update. Once again, this is Chad Stayskull with Eagle Wealth Management signing off for the month of January 2017. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please feel free to give us a call at 541-330-0220, and we'd be very happy to talk with you. Now, for that disclosure. While we believe the information in this report is reliable, we cannot guarantee its accuracy. The opinions expressed are subject to change without notice and are not intended for the investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Take care.